Hello. What she? 9 test. What are you doing there? Okay. Now see. We have completed two clauses, right? Now clause 1 and clause 2. Now can you see clause 3? Value of prescribed benefits, amenities or facilities. Which are the benefits prescribed? Motor car, servants, gas, water, electricity, education and travel tickets. Okay, now these 5 benefits, if given in the hands of specified employees, we're supposed to dance and we are supposed to and someone goes, actually it is a tradition over here. No problem. Okay. Gautami, turn on camera. Maitri, turn on camera. You'll keep your cameras off, no? That's why we don't talk to you. If you'll keep on camera on, we'll be able to interact with you also. Okay. Are you all understanding what is going on in here? 100% sure? Okay, very good. So keep your cameras on. I'll keep the screen, huh? Okay. Don't talk. Okay, so 5 benefits. Okay, these 5 benefits are taxable only in the hands of specified employees. Keep that screen. Now see, these 5 benefits are there, no? Taxable for specified employees. Who is a specified employee? Number 1, if you are a employee of a company and also a director in that company, a director employee treated as specified employee. Or you are the employee of a company, you are not the director in that company, but you are having substantial shareholding in that company, meaning 20% or more shares are held by you. Employee also and shareholder also having 20% or more share capital, then you are also a specified employee. You are also a, oh, you are any other employee, not a director in a company, not a substantial shareholder, you are any other employee. Then your net cash salary, during the previous year from all your employees taken together, net cash salary should be more than 4 lakhs. Color, green color, and there is a highlight by yellow color. Okay, so this means that this is an amendment made by this Finance Act. Earlier, there was a limit of 50,000 and everyone used to be specified employee. Why? Only 50,000, very small limit was there. And majority of the employees will have net cash salary of 50,000 or more during the year. Yes or no? That limit was so less that every employee used to become what? Specified employee. And these 5 perquisites used to be taxable in the hands of all employees. There was no point of saying that these are taxable for specified employees and not taxable for non-specified employees, because majority of the employees used to become what? Specified, because of this clause. So this year they have brought a change. They have changed that the net cash salary should be more than prescribed limit. Prescribed in the Finance Act, they said it should be more than prescribed limit. And the limit later on they prescribed by issuing a notification. That notification came on 18th August. So in that notification, they prescribed this limit of 4 lakh. Now tell me, if you are an employee, You are any employee, but not the director in a company, not a shareholder, substantial shareholder in the company. You are any employee. From all your employers during the previous year, if your net cash salary is more than 4 lakhs, more than, meaning if it is 4 lakhs, you are not a specified employee. Less than 4 lakhs, you are not a specified employee. It should be more than 4 lakhs. It should be, then you are a specified employee. But now to calculate this net cash salary, to calculate this, please don't take non-monetary benefits. Please don't take exempt portion of allowances and take all the deductions available under section 16, provided you don't follow 115 BSc. And if you follow 115 BSc, then take the deduction under 16 clause 1A, standard deduction, and that also 75,000. So all the monetary benefits coming to you, all the monetary salary, like basic, commission, bonus, allowances, don't take the exempt portion of allowances, but taxable portion you will have to take. Yes or no? All the reimbursements by the employer in cash, that is also your cash salary. So whatever cash salary coming to you during the previous year, other than your non-monetary salary, all the cash salary you are supposed to take from all your employers during the previous year. And if that total, after taking deductions under section 16, that is known as net cash salary, and that total should be more than 4 lakhs, then you are also a specified employees. Yes or no? So net cash salary has to be taken from all employers during the previous year. And in this net cash salary, you are not supposed to take non-monetary benefits, you are not supposed to take exempt portion of allowances, and deduction under section 16 you are going to take. Yes or no? Are you all understanding? Gautami, please switch on your camera. Gautami is not there. Don't switch off your camera. Okay. Now see, 3 types of employees are specified employee. Number 1, you are an employee of the company and the director. Number 2, employee in a company but having substantial shareholding, meaning 20% or more shareholding in the company. Now you are any other employee having net cash salary of more than 4 lakhs. Now any of these employees, if you see, they are specified employees, and these 5 perquisites which are prescribed in clause 3 will be taxable in their hands only. Now any other employee who is not a specified employee, receiving these perquisites, what will happen? For them, the benefit is not taxable. No need to do valuation. So valuation will be done only if these benefits are given to specified employees. Yes or no? Now assuming that you are a specified employee and the employer is giving you these benefits, we'll learn how to derive the values. Okay. So first benefit is motor car, no? So can the employer give motor car facility to the employee? Yes or no? If the employer is giving motor car facility to the employee, is it a perquisite under clause 3? Yes. So its value will be determined as per rule 3(2), and the value will be taxable under the head salary. Now how to determine this value which will be taxable under the head salary for the employee? How to determine this value? Now pay attention. For motor car, some facility is given. Now try to understand that for motor car, if the facility is given, then the motor car can be employee's motor car. The motor car can be employer's motor car given to the employee. 2 possibilities are there. For employee's motor car, facility can be given, and for employer's motor car given to you, that motor car and any facility relating to that motor car can be given to you. Yes or no? So first of all, you have to identify that whose motor car we are talking about. We are talking about motor car which is owned by, and then we will talk about the motor car which is owned by the employer or taken or hired by the employer. So employer is giving you a motor car also. In this case, employer is not giving you motor car. We're talking about your own motor car. Okay, no? So if your motor car, employee, your motor car. For this motor car, what benefit you can get? Tell me. Is the employer giving you motor car to use? Is the employer giving you motor car to use? No. You are using your own motor car. By using the motor car of the employer, you are not having any benefit. You are using your own motor car. So for your own motor car, can the employer give you some benefit? What type of benefit? The running and maintenance cost. What did they say? Running and maintenance cost means petrol cost, diesel cost, yes or no? And all the repairing and maintenance cost of the motor car can be met by your employer. Now you have to check that motor car belongs to you and the expenses of that motor car, meaning running and maintenance cost of the motor car, is also met by you. Is there any benefit given by the employer? Car is yours, expenses also you are incurring. Is the employer giving any personal benefit? So this situation will be ignored. If the motor car is owned by the employee, running and maintenance expenses met by the employee, there is no benefit given by the employer. So this situation only we will ignore. Benefit will arise only if for your motor car, running and maintenance expenses are met by whom? Employer. Now see, running and maintenance means what? All the costs relating to running and maintenance, like repairing, etc., petrol, diesel, etc. Confirm those costs are met by whom? Employer. Now, along with these costs, employer might pay for a driver, might not pay for a driver. Running and maintenance expense does not mean driver's expense. Yes or no? Expenses mean all other expenses other than driver. So, can your employer meet running and maintenance expense? Yes. All the running and maintenance expenses are met by employer. But along with that, the driver might give driver's expense also and might not give driver's expense. But running and maintenance expense, confirm the employer is incurring. Now tell me, your car expenses are met by? What is your benefit? The amount of expense met by employer with driver, without driver. Yes or no? Can I say, if he would not have met this, would have to met this? So, whatever expenses met by him, running and maintenance expense with or without drivers. Yes or no? Your benefit. Is it your benefit? Yes, that is your benefit. Because for your car, the expenses should be met by you only, no? He is meeting those expenses, meaning whatever expenses he is meeting, if he would not have met, you would have to meet them. Are you meeting those expenses? No. Who is meeting those expenses? So isn't it a benefit from the employer? So whatever expenses met by him, running and maintenance expenses met by your employer, maybe with driver or without driver, is your benefit. Can your employer recover something out of that? Can your employer recover something out of that? So if he is meeting some expense, that is your benefit, but out of that benefit, if he is recovering something, that recovery should not be your benefit. So expenses met by minus recovery from the employee, if any. If, isn't it your net benefit? Isn't it your? It should be fully taxable. It should be. If the car is used by you only for personal purpose, only then this benefit is Personal benefit. Car is used for personal purpose and the expenses are met by employer. Only then those expenses will become your personal expense, personal benefit. Yes or no? So just meeting the expense will not become your taxable perquisite. You will have to see the use of the car. Use of the, so whose car? Employee's car. Who is meeting the expenses? What is the benefit? Who is meeting the expenses? Employer. With driver or without driver? So what is the benefit? Expenses made by employer with or without driver minus amount recovered from the employee if any. That is the benefit. That benefit will be fully taxable. That benefit will be fully taxable in the hands of the employee if the car is used only for personal purpose. Getting my point? Hello everyone. But what if that car was used only for official purpose? Then that entire benefit is official. So even if you write this benefit over here, then also it will become fully exempt. Taxable value will be nil. What if that car is used by you partly official and partly personal purpose? That benefit fully taxable, fully exempt. Part should be exempt, part should be taxable. Because car is used partly official, partly personal. Getting my point? So how much benefit? This is the benefit happening. Actual expenses met by the employer may or may not include driver's expense minus the amount recovered. This is your benefit. This benefit will be fully taxable if the car is used only for. The same benefit will be fully exempt if the car is used only for. Then the benefit value will be nil. But don't you think this benefit should be some amount taxable and some amount exempt? Because now the car is used partly official, partly personal. So what was your benefit? This was your benefit. Can you see copy paste? Can you see copy paste? Check. Actual expenses made by employer, actual expenses made by employer. May or may not be with driver. Minus amount of recovery, minus amount of recovery. So this is the benefit. But this benefit now cannot be fully taxable because the car is used only for personal purpose. Only for official purpose? No. Partly official, partly personal. So out of your total benefit, some benefit should be exempt. Assuming that it is for official. Assuming that it is for. So how much will be exempt? We will tell you. 1800 per month. 1800 rupees will be exempt. Assuming that it is official. So out of the total benefit, 1800 per month will be exempt. Assuming that it is out of the total benefit, 1800 is assumed to be official and take the exemption. Balance will remain, no, that will be taxable. But wait, 1800 we will allow you to reduce. The car's engine capacity was 1600 cc or less. You will have to check your car's engine capacity. If the engine capacity was 1200 cc, then 1800. If it was 1500 cc, then 1800 rupees. Yes or no? If the car's engine capacity was 1600 cc, then 1800 per month. And the driver is also meeting the, the employer is meeting the cost of driver also. So along with this expense, if the driver's expense is also met by employer, then extra 900 for the driver also you reduce. Yes or no? So now instead of 1800 you will reduce 2700 per month. 1800 plus 900 will be 2700. 2700 means 1800 for expenses and 900 for driver. But what if driver's expenses are not met by the employer? Then no need to reduce 900, reduce only 1800. But wait, 1800 you will reduce if the car's engine capacity is less than or equal to 1600 cc. Meaning the car is a normal type of car. The moment the car's engine capacity goes beyond 1600, no, car becomes a little bit luxury car. The expenses are also higher. If higher expenses, higher exemption for official purpose. So in that case, now you will get the exemption of 2,400. 2,000 and 900 extra for driver also. So what if the amount met by employer? Your benefit? Yes. Maybe with driver, without driver. Minus the recovery. That is your benefit. Out of that benefit, how much will be exempt? 1,800 will be exempt per month or 2,400 per month, depending on the engine capacity. If the engine capacity is 1600 cc or less, then 1,800. If the engine capacity is more than 1600, you will reduce this only if only the expenses are met. What if the driver's expenses are also met and the driver's expenses also included here? Then along with 1,800, along with 2,400, take the extra exemption of 900 per month for driver. So 1,800 will become 2,700. 2,400 will become 3,300. Getting my point? Hello. Now see, how many parts are there? A, B and can you see B part? If the car was used only for what is the benefit? Actual amount spent by the employer minus the recovery. Yes or no? Fully taxable in your hands, whether you are a specified employee or a, here the benefit will not be taxable only if you are a specified employee. This benefit will be taxable even if you are a non-specified. Yes or no? Exemption can be taken by any employee. Specified employee, take the exemption. Non-specified employee, exempt. Partly exempt, partly taxable. This value will be taxable only if you are a specified employee. This value will be taxable only if you are a, I'm talking about this part. If the car belongs to employee, maintenance and running expenses made by employer, and the car is used only for, then this benefit which you have calculated here will be fully taxable, whether you are a specified employee or, understood? Sure? Now pay attention. Now whose car? Can the employer give you a car? That car was owned by the employer. That car can also be given. Or the employer can take a car on rent and that car can also be given. Now will you use that car? If the car is given, will you park the car or use the car? So will you use the car? By using the car given by the employer, benefit of using will happen. Benefit of using the car will happen. An additional one more benefit will happen if the employer meets the running and maintenance cost. Now how many benefits are happening? Only the cost is met by the employer or he is giving the car also. So his car if you will use, by using the asset given by the employer, one benefit will arise and the expenses of that car also met by the employer, second benefit will arise. Now who is giving you the car? Is the car owned by the employer? What will be the benefit by using such car? Do you remember furniture? Furniture owned by the employer, that furniture is given. How much is your benefit? 10% per annum of the actual cost of that furniture. Now instead of furniture, what employer is giving? Car is also a movable asset, just like furniture. So for any movable asset, what did I say? Any movable asset which the employer will give you for use. And if that movable asset was owned by the employer, by using that asset, how much benefit will arise? 10% per annum of the actual cost of that asset. So earlier we were talking about furniture. Now we are talking about which movable asset? Car. Car is also a movable asset. Was the car owned by the employer? So what will be the benefit? 10% per annum of the actual cost of that car to the employer. Will be the benefit arising to you by using that car. Can the employer give you a rented car? The employer has taken on rent. Hello? Will there be a benefit? How much? The actual rent of that car paid by the employer will be your benefit. If he would not have paid, you would have to pay that rent. Understanding? So this is the benefit which will arise by using the car, which the employer will give you, whether it is owned by him or taken on rent by him. This benefit is confirmed because you are going to use that car now. Understanding? Tell me yes or no. Now, for that car, what if the employer meets the expense also? So for this car, running and maintenance expenses are met by whom? Employer. Running and maintenance expenses are met by. Now, how many benefits are happening? One benefit or two benefits? What benefit? One, benefit by using the car. Two, the cost is also met by the employer. Now, both the benefits you will have to calculate. What is the first benefit? Use. What will be this benefit? 10% of the actual cost of the car or actual rent of that car paid by the employer. Whichever is higher or lower. Tight slap. They're lower. The car belongs to employer, then 10%. Actual rent paid by the employer will not come. And if the car was taken on rent by the employer, then actual rent by employer will come. Then 10% will not come. 10% or actual rent. Whichever is higher, lower, or as the case may be. As the case may be. Any one value will be taxable by using. So two benefits are happening. Use and expense. Why expense? Because running and maintenance expenses are met by whom? Cars use. Expense, benefit. Two benefits. So use benefit. Use benefit. 10% or actual hire charges of the car paid by the employer. Whichever is as the case may be. This benefit. Now you will have to calculate this benefit. Expenses met by the actual amount on the running and maintenance expense met by the employer. Maybe with driver, maybe without driver. Getting my point? So this is your benefit. Both the benefits are happening to you. Minus any recovery from you. Minus. Now you'll have to read the question very carefully. You'll come to know that the car belongs to you. Car belongs to, you'll come this side or you'll come this side. You'll come this side. Car is owned by employee. Now you will check the question. Oh, car belongs to employee. Very good, very good. Who is meeting the expenses? Ayyo, employee is meeting the expenses. Then ignore. No benefit. But oh, expenses are met by employer. All the running maintenance expense, including driver's expense, paid by employer, or employee pays, employer reimburses, meaning met by employer only, no? Then you will come this side. Whatever expenses met by employer will be the benefit for the employee. Oh, employer is recovering this amount from the employee, minus. So net benefit, fully taxable. They are saying car is used only for personal purpose. Even if the employee is a specified employee or a non-specified employee, that will be fully taxable. Oh my God, they are saying that the car is used only for official purpose. The benefit which I have calculated is of no use, fully exempt. Oh my God, they are saying that the car is partly used for official purpose, partly for personal. The benefit which I have calculated will not be fully taxable, will not be fully exempt. Out of this, some amount will be exempt. Balance will be taxable. How much will be exempt? 1800 per month, 2400 per month, depending on the engine capacity. Let me check the engine. Oh, 1200 cc means 1800. Oh, 2000 cc means 2400. Getting my point? All these things you have to ask from the question. The question will give you these informations. Understanding? So, when I took the benefit, no, with expenses, the employer was also meeting driver's cost. Driver is also provided by the employer. Then I must not reduce 1800, I must reduce 2700, 900 extra for driver. Oh, 2400. No, I will not reduce 2400. I will reduce 900 extra, meaning 3300. Now, if you see the question, you will come to know, ayo, car was given by the employer. Car is not mine. Car given by the employer. Everything will be written in English. Some language that you have to interpret. And you have to interpret and you have to find out. Now we will come this side. Car belongs to? Because in the question it is written that employee is provided with a car. Employee is provided with a. So who will provide the car? Employer. The cost of that car to the employer was 18 lakhs. How much? 10% of that. That will be the benefit happening to the employee. Hello, sir. And the expenses of this car amounting to 12,000 rupees per month are met by employer. 12,000 into 12. 12,000 into how much? 1,44,000. Met by whom? Employer. So that 1,44,000 is also a benefit. So by using the car, how much benefit? 1,80,000. 10% of the actual cost. Expenses met 12,000. 12,000 multiplied by 12. 1,44,000. 1,80,000 plus 1,44,000. How much is the total benefit? 3 lakh. What you have done? You have taken, if the motor car is owned, then you are taking 10% value. Then you are taking, how much we got? 1,80,000. And expenses met by the employer. How much expenses employer was meeting? 12,000 per month into 12. 1,44,000. So how much is the total benefit happening? Did you take one benefit or two benefits? Use benefit also you have taken. Expense benefit also taken. Why use benefit? Car is not yours. Employer is giving you. Why expense? Expenses you are not meeting. Employer is meeting. So two benefits. So total is how much? 3,24,000 is the total benefit. Now out of this, no, employer recovers 10,000 per month from you. Employer recovers 10,000 per month. 10,000 into 12. 1,20,000. So out of 3,24,000, if 1,20,000 is recovered from you, how much is the balance? 3,04,000 benefit given. Out of that 1,20,000 benefit is taken away by the employer by recovering. Yes or no? So how much benefit remaining? 2,04,000. That 2,04,000 will be fully taxable for you. The car is used only for personal purpose. Understanding? No. But what if that car is used only for? Then whatever benefit you have calculated, sir, that will be fully, no need to calculate also. Understanding? But sir, if in the question they are saying that the car was given by the employer, but the employer has taken the car on rent then, and the rent paid by the employer for the car was 15,000 per month, then 15,000 into 12, 1,80,000 will be the actual rent paid by the employer. Actual rent paid by the employer. That will be how much? 1,80,000. That will be your benefit. And how much expenses met by the employer? 1,44,000. How much is the benefit? 3,24,000. Out of 3,24,000, how much employer is recovering? 1,20,000. 1,20,000 you will reduce here. 1,20,000 you will reduce here. How much is the total amount? 2,04,000. Fully taxable if the car is used only for. And if that same car is used for official purpose, will you calculate this benefit? Fully exempt. Car belongs to employer. Car is given for use. Or car is taken by the employer. That car is given for use. Plus expenses also made by the employer. One benefit, two benefits. Use benefit plus expense benefit, both taken together, minus any recovery. Fully taxable if the car is only personal. Fully exempt if the car is only. What if this car, partly official, partly personal, partly exempt, partly taxable? So out of this benefit, some benefit should be exempt and the balance should be taxable, like we did in the last case. Yes or no? Here they are saying, don't do this much hard work. Don't do this much hard work. We will give you a flat amount. We will give you a flat amount. Show this amount taxable. How much is that flat amount, 1800 per month or 2400 per. Last time we reduced this amount out of the total benefit. Do you remember? But this time they are saying pay tax on this amount only. If the car was used only for personal, only for, then this benefit is taxable. If it is for official, this entire benefit is exempt. But if the car is partly official, partly personal, then out of this benefit, some is official, exempt, balance is taxable. Why are you doing so much hard work? We are giving you a flat amount. We are giving you a flat amount. That flat amount you show taxable. And how much is that flat amount? 1800 per month or 2400 depending on engine capacity. Extra 900 will also be taxable. If for the car, expenses are met by the employer along with driver. Only expenses are met, then 1800 and 2400. But along with the expenses, if the driver's expenses are also met, then 2700 will be taxable, 3300 will be taxable. But remember, for this car, the employer is recovering anything from you, that recovery will not be reduced. Why? Because a flat amount is taxable. No, are you going to pay tax on the more amount? No. So how do we take tax on less amount? Why are you recovering? Sorry, why are you reducing the amount recovered? If we are giving you a benefit, we are saying that pay tax on this flat amount, which is very less. So pay tax on this flat amount, no. So any recovery, I'm talking only about this car. I'm talking only about this car, which is partly official, partly personal. For this flat amount will be taxable. Any recovery made by the employer from the employee for this car, please don't reduce that recovery. Partly official, partly personal. For this car, if any recovery is made by the employer, don't reduce that recovery. The flat amount will be taxable, either 1800 or 2400. Now tell me, I'm giving one case. Employer has given one car to you. You are an employee. Employer has given one car to you. Let's say that car was owned by the employer. No, that car was taken on rent by the employer. Employer is paying 10,000 rupees per month as rent of that car. How much rent the employer has paid? 1 lakh. That car is given only for 8 months. So 10,000 into 8. 10,000 into, by using that car, how much rent you would have paid? 80,000. If you would have taken the car on rent, how much rent you would have paid for that car? 80,000. So that 80,000 the employer has paid will be your benefit. Yes or no? So 80,000 is your benefit. Now during those 8 months, the expenses incurred on the car were 50,000. Were? And employee only incurred those expenses. Employee incurred those, but later on reimbursed by the employer. Meaning, who is meeting the cost? Who is meeting the expenses? Employee or employer? You are incurring the cost, but the employer is reimbursing, no? So isn't it a benefit for you? How much? 50,000. So during those 8 months for which you are using the car, the total running and maintenance expenses were 50,000. The employer is meeting that running and expenses also. So what was the benefit by using the car? 80,000. What was the benefit of the expenses met by the car? Met by the employer? 50,000. 80 plus 50? 80 plus 50. And the car is driven by a driver. Car is driven by the whose monthly salary 5,000 rupees paid by the employer. So how much employer will pay? 5,000 into 12 or 8? Only 8, huh? So 5,000 into 8. How much? That 40,000 driver's salary was paid by you only, not reimbursed. Then employer is meeting only expenses. How much? 50,000. Is he meeting the expenses of the driver? No, you are meeting the expense. How much is your benefit? 80,000 plus 50,000. 80,000 plus 50,000. Total benefit 130. 130. Out of this, the employer is recovering 25,000. 1,05,000. Fully taxable if this car you will use for personal purpose only. Fully taxable. This 1,05,000 which you have calculated will be fully taxable if this car you are going to use only for personal purpose. What if this car you are using only for official purpose? Fully exempt. So no need to calculate 1,05,000 also. Understood? But what if in the question they are saying that this car was partly used for official purpose, partly used for personal purpose? What are you going to do? Don't calculate this 1,05,000 because for such cars, a flat value is taxable. Flat value is 1,800 or 2,400 per month. Per month. But wait. For that you should know the engine capacity. Now in the question, if the engine capacity is given 1000 cc, less than 1600 cc, so 1800 will be taxable. Add 900 or don't add 900. Why? Because the driver's salary is 60,000. Hello? Whatever salary of the driver was there for 8 months, sorry, not 60, for 8 months, whatever driver's salary was there, was the employer paying that driver's salary or was not paying? You were paying, employer did not reimburse, yes or no? So only 1,800 will be taxable. 900 extra for driver will not be added. But what if driver's salary was also reimbursed? Then in your total expense 1,30,000, the driver's salary will also be added. That is also your benefit. Getting my point? And here 1,800 will not be taxable, 2,700 will be taxable. Getting my point? Everyone online? Understanding? Sure? Okay, perfect. Now pay attention. What if the car's engine capacity was 1,800 cc? But the car is used only for personal purpose. Why do you see engine capacity? Full amount taxable, yes or no? But if partly official, partly personal, then you will have to see engine capacity. Then 2,400 if driver's expense not met by employer. And if driver's expense also met by employer, then 3,300. Now employer will recover some amount. Remember that 25,000 employer was recovering. Don't reduce that 25,000 out of this, that amount which you are taxing. Yes or no? 1,800 or 2,400 plus 900, if any. Yes or no? From this amount, you are not supposed to reduce that 25,000 which the employer was covering. This is fully taxable. Now tell me, can this happen that the car was given by employer? Who is giving you the car? Meaning, you will be using that car. Benefit by using the car is confirmed. Benefit by using that car is confirmed. But expense benefit will not happen. Why? Because now the running and maintenance expenses are met by employee. Now how many benefits? 2 benefits or only 1 benefit? Use. Employer will give the car, you will use that car, only the benefit of use will happen. 10% or actual higher charges of the car, as the case may be. That benefit will only happen. Yes or no? Expense benefit will not happen. No need to calculate and add. Why? Because bloody expenses you are meeting. So if you are meeting the expenses, employer is not meeting the expenses, benefit of expenses is happening or not happening? Not happening. Why are you adding it? Don't add. Understanding? But wait. Running and maintenance expenses you are meeting, maybe driver's salary still the employer can give. Yes or no? So what if driver's salary is met by? Will you add the expenses? No. Running and maintenance expense, no need to add. Why? Because you are meeting them. But if driver's salary was paid for that car, then whatever driver's salary paid by the employer will be your benefit. Then add driver's salary also. Getting my point? So here Two benefits or one benefit? Use. What will be the benefit by using? If the motor car is owned by the employer, then 10% per annum. If it is taken on hire by the employer, then actual hire charges. 10% or actual hire charges. Whichever is as the case may be. Yes or no? This is the benefit. Will you add the expenses of running and maintenance? No. Why? Because employee is meeting them. No need to add because that is not your benefit. But can you add the driver's salary? Yes. Driver's salary, if paid by employer, then you will have to add because that is also your benefit. Now total benefit, use and driver salary if any, minus some amount if the employer will recover, reduce that. Can I say now this is your benefit? Fully taxable because the car is used only for personal purpose. Yes or no? This entire benefit will be fully exempt if the car is used only for official purpose. But what if car is used partly official, partly personal? Can this entire benefit be exempt? No. Can it be fully taxable? No. Some amount will be exempt and the balance will be. Don't do that hard work. We are going to give you a flat amount taxable here also. How much flat amount? Earlier it was 1800 and 2400. Why? Because there were two benefits, use as well as expense. Now there is only one benefit, only use. So flat amount should be higher or flat amount should be lower? Earlier when two benefits were there, use benefit as well as expense benefit, that time higher amount was taxed, 1800 and 2400 depending on the engine capacity, plus 900 extra if the driver's salary was also paid by the employer. Yes or no? But now only one benefit is happening. Expense benefit is not happening, only use benefit is happening. So now the flat amount will be taxable. That flat amount should be a higher amount or it should be a lower amount? Lower amount. Lower than 1800, lower than 2400. Yes or no? 1800 or 2400 was taxable as a flat amount when I was having two benefits. Now I am having only one benefit, only by using the car. So now that higher amount of 1800 or 2400 should not be taxable. Now a lower amount should be taxable, and that lower amount is 600 per month or 900 per month depending on the engine capacity. And add extra 900. Add extra 900 if the driver was also provided. No need to reduce any recovery like you did for the last case. Will you remember this? Tell me yes or no. Now in the question, if they have given the car belongs to the employer, owned by the employer, cost of that car was 12 lakhs. How much? So what are you going to do? And that car is given to employee. So car which is owned by the employer is given to the employee. What was the actual cost of that car? 12 lakh. 10% of that. And that car is given for full year. How much is the benefit? Lakh 20. You use that car. What will be your benefit? 1 lakh 20. All the expenses of that car for the full year, 60,000 rupees. Running and maintenance expenses of that car, 60,000. Met by employee himself. Not reimbursed by the employer. Met by the employee himself. Will you add this 60 in your benefit? Apply some common sense. If you are meeting the cost of your car, is it a benefit given by the employer? No. No need to add those expenses. But a driver was provided with the car by the employer and salary of the driver was 6,000 rupees per month. So 6,000 into 12, 72,000. And the salary of this driver was paid by the employer only. Expenses of 60,000 are not met by employer, no need to add. But the driver's salary 72,000 is met by employer, you will have to add them. Getting my point? Add 72. 1 lakh 92,000. Is it your benefit? Out of this, employer recovers 40,000. 1 lakh. So what you did? You took 10%. Did you add expenses? No, because those were met by you. But did you add driver's salary? 72,000. So 1,20,000 plus 72 gave you 1,92,000. Out of that, recovery made by employer was 40,000. So balance was this entire 1,52,000 you have calculated will be fully taxable. If the car is used only for personal purpose, will be given in the question only. Hello, sir. But wait, if the car is used only for official purpose, don't calculate that 1,52,000. Why? Because this entire benefit is exempt. Taxable value will be nil. But what if the car is used partly official, partly personal? Then also don't calculate this 1,52,000. A flat amount is taxable. How much is that flat amount? 600 per month or 900 per month. So you are using the car for 12 months. So 600 into 12. If the engine capacity is less than or equal to 1600 cc. Yes or no? How much will be taxable? 7,200. Amount recovered by the employer was how much? 40,000. No need to reduce. Flat 7,200 will be taxable. But wait, 7,200 if you are taxing, you are doing a wrong thing. Why? For this car, 72,000 drivers salary was met by employer. So for driver, you will have to add 900 extra. Instead of 600, how much you will charge? 1,500. 1,500 into 12. That will be 18,000. Yes or no? And if the car's engine capacity was more than 1600 cc, then 900 plus 900. 1800 will be taxable. 1800 into 12 will be 21,600. Understood? Amount recovered by the employer was how much? 40,000. Employer was recovering 40, no? No need to reduce that amount here. This flat amount will be taxable. Did you understand? So I will tell you. I will ask you a few questions, okay? Not giving me the answer. First of all, whose car? Employee's car. Whose car? And whose expenses? For example, employees. What are you going to do? Or no? Now, employee's car. And expenses? Employers. Benefit or no benefit? Benefit or no benefit? Tell me the benefit. You are going to tell me the benefit. Huh? You are going to tell me that how much will be the benefit. Expenses. Will I take the expenses? Met by the, maybe with driver, maybe without driver. Minus recovery from the, minus recovery from the will be your benefit. Expenses met by employer. So you will take the expenses. Okay, no? Expenses minus recovery. Only official, only personal, partly official, partly personal. Only official, taxable value will be nil. Only personal, then this amount will be fully taxable. Yes or no? And only, sorry, partly official, partly personal, then this amount which you have calculated minus 1,800 or 2,400. But if this expenses also include driver's salary, then 900 extra you will reduce. Yes or no? But if this expenses does not include driver salary, then don't reduce 900, reduce only 1,800 and 1,400 depending on the engine capacity. Yes or no? Now tell me, if employer's car, meaning owned or given, taken on rent, yes or no, and expenses also by employer, what will be the benefit? One benefit or two benefit? Employer, two benefit, no? Use also, expense also. Can you see? Use, expense. Use, expense. Both the benefits are done by employer. So now, first benefit, come on, tell me. Either you will take 10% of actual cost, or you will take actual higher charges of the car paid by the employer. Higher charges of the car paid by the is one benefit. Yes or no? Another benefit, expenses made by the employer. These expenses may be with driver, without driver. Yes or no? Minus any recovery. Use of the car. Fully official. Nothing taxable. Fully personal. This entire value which you have calculated will be taxable. Now, partly official, partly personal. This entire value which you have calculated, no, ignore that value. A flat amount will be taxable. How much? 1800 or 2400 minus recovery. Will you do the recovery? No. But wait. In this 1800 or 2400, in this 1800 or 2400, you have to also tax 900. If this expenses also include driver's expense. But if this expenses does not include driver's expense, then only 1800 or 1400. Understanding or not? See, if you apply some logic, then this will become easy. But if you try to by heart this perquisite, 100% you will forget. 100% you will forget. Okay. So now tell me, here recovery will not be reduced. Now tell me, car belongs to employer and all the running and maintenance expenses made by. Now one benefit is happening or two benefits? Only the use of car. Expense benefit is not happening. So what I'll do, I will take this benefit. I will not take this benefit. But wait, driver's salary if paid by the employer will be taken as my benefit. Yes or no? And minus the recovery. So what I'll do, here I will take 10% of the actual cost or higher charges paid by the employer. Plus, will I add the expenses? Will I add the expenses? No, because expenses are made by employee. No need to add the expenses. Will I add the driver's salary? Hello? Only if employer has met. If employer has not met, then no need to write driver also. So can I say driver salary, if any, paid by the employer? Only then it will be your benefit. Only then you are supposed to add. Hello? Minus what? Minus recovery. Now tell me, fully official, fully personal, partly official, partly personal. Fully official, nil. Fully personal, you have calculated the value, that value will be taxable. Yes or no? And partly official, partly personal, you have calculated the value. Yes or no? But this value you are not supposed to take. Here also a flat amount will come. How much? 600 per month or 900 per month, depending on the engine. And if you have added this amount, then also add 900 per month for the driver. Minus recovery from the employee. Don't reduce. Only this flat amount will be taxable. Only this flat amount will be taxable. Understanding? This is motor car facility. This valuation you are going to do only if the employee is a specified employee. But wait. One place. This place. Can you see this place? This value is taxable. Car belongs to employee. Expenses made by employer. And the car is used only for personal purpose. Then this benefit will be taxable. Will be in the hands of both types of employees. Specified as well as non-specified. Rest other valuation applicable only if the employee is a specified employee. Will you remember this? Should I move ahead? Now what if I will tell you, I'm asking you, any other automotive? Am I talking about the car or I'm talking about any other automotive? Any other automotive? Scooter, motorcycle, cycle. Cycle is not an automotive. scooter or motorcycle. Can I say scooter or motorcycle? This any other automotive belongs to employee. Belongs to, and the expenses on this running and maintenance expenses of this automotive met by employer. How many benefit? Come on. Employer is written twice or only once? Where? Only expense benefit is happening, no? What benefit? Whatever expenses met by, isn't it a benefit? Minus recovery. Minus automotive is used only for official purpose, only for personal purpose, partly official, partly personal. So the value which you are going to calculate will be fully exempt. This value will be fully taxable if the automotive is used only for personal purpose. And now this value which you have calculated will be taxable, but full amount will not be taxable. Out of this, some amount will be reduced for official purpose, like we did for the first case. You remember how much we reduced? 1800 per month, 2400 per month, depending on the engine capacity. Now that we reduce only if it is a car. It is a automotive. So we will not check the engine capacity. Straight away, they are telling you to reduce 900 per month. So out of the total benefit, 900 will be treated as your official and reduce that. Also reduce 900 for driver. You want driver for your scooter. We used to reduce 900 extra for driver. Yes or no? In case of motor car. Bloody, this is not a motor car. This is automotive. So for automotive, the driver will also be provided or no driver will be provided. So separately 900 for driver, no need to reduce. Understanding or not? Only reduce 900 instead of 1800 and 2400, reduce 900. Ignore the engine capacity. Yes or no? And separately that 900 which was supposed to be reduced for driver, that is not reducible. Why? Because for other automotive, drivers will not be provided. Scooter, you will ride only. Not ride. Oh, you want driver. Very good, very good. Huh? Okay. You want, you can take the driver, but 900 will not be allowed. Understood? Everyone. So if other automotive is there, you are supposed to do like this. Okay? Pay attention. See here. Any other automotive is owned by the employee and running and maintenance expenses met by, and use of such automotive is fully official. Benefit is fully exempt. If it is fully personal, then benefit is fully taxable. How much benefit? Actual expenses met by the employer minus recovery from the employee, if any. This benefit will be fully taxable. This entire benefit is exempt here. Can you see? And see, this benefit will be taxable even if you are a specified employee or a non-specified employee. Now this entire benefit, out of this, some amount will be reduced, assuming that it is official. Assuming it is official. Instead of 1800 and 2400, reduce 900. And don't reduce separately 900 for driver, which you can in the case of motor car. Understanding? Hello? Now, use of motor car or automotive, you are claiming as exempt. This entire valuation will be useless. Every time when we will ask you how you are using the car, how you are using the automotive, official. What? Official. Oh, assessee is a employee is a honest person. Saying it is official, fully exempt, fully exempt, fully exempt, fully exempt. Then what was the need for evaluation? Other rules? If you are saying that it is official, prove it. How will you prove? You will have to bring a certificate for official use. Certificate for official use. Who will issue this certificate? Your employer will issue this certificate. So take the certificate of official use of your motor car or automotive, and based on the certified official use, we will consider that it is used fully official or partly official. And if you cannot bring that certificate, don't come and claim official or partly official. Yes or no? We will consider the use as personal only. But if you are saying that it is used for official purpose, then certificate for official use from the employer. And employer will issue this certificate based on logbook, which the employer will maintain. Employer will have to maintain the logbook. That logbook date will be given, kilometers the motor car is driven, that kilometers will be given, who is using that car, for what purpose the car is used, what purpose the vehicle is used, how many kilometers it is driven, what is the mileage, everything relating to the official use must be there in the logbook. And based on the entries of official nature in the logbook, the certificate must be issued. And based on that certificate only you can claim the official use. Otherwise, it will be considered as personal. Yes or no? Now, one question is coming in my mind. I'm asking you that question. Okay. Now, see, employer is giving you a car. So, car belongs to employer, or he might have taken the car on rent. Now, expenses of the car is also made by employer. Now, you know that the car, employer's car, and expenses also he is meeting, bloody two benefits will be taxable in my hands. If I say that this car is used for personal purpose, so how many cars the employer is providing? One car. Only one car he is providing, and the expense of this car is also made by employer. So what happens if this car is fully official, fully personal, and partly official, partly personal? In partly official, partly personal, what happens? A flat amount, 1800 or 2400 is taxable per month, plus 900 rupees extra. You know that this is a very small amount. Know that this is a very small amount. Now see, what if such type of more cars are given to you? Are you getting only one car? More than one car. Meaning, for example, your employer is giving you 3 cars. How many cars the employer is giving? 3 cars. And all the cars expenses are met by employer. Possible, not possible? Tell me. Not possible. You don't think also, big. Employee also, very small type of employee. Think big, no? Did I give you the example of that 2 plants? Bangalore, Coimbatore. Possible or not? So you are handling multiple operations at multiple places. Whenever you are in Mumbai, employer will give you a car and expenses will be met. Whenever you are in Bangalore, employer will give you a car. So there is a specific car for you only. Expenses will be met by the employer. This car will not be used by anyone else. This is for you only. So whenever you are in Bangalore, the car is yours. Whenever you are in Mumbai, the car is yours. Whenever you are in Coimbatore, car is yours. You are having 3 cars. All the 3 cars are given by the employer, and expenses are also made by employer. This is known as pool of cars. This is known as, now in this pool of cars, what are you saying? All the 3 cars, are used by me, partly official, partly personal. So for all the 3 cars, you want that this value should be taxable. Bullshit. No, cannot happen. Why? Any one car, any option we will give you, any one car, choose any one car, its valuation will be partly official, partly personal. This flat value can be taxable only for one car. Rest all the other cars will be deemed to be personal. And for that car, use benefit as well as expense benefit minus the recovery, the net amount which is there, that will be fully taxable for the remaining cars. Sir, 2 SOPs remaining DLOP. Do you remember? Just like that. One car, partly official, partly personal. All the other will be deemed to be personal. You cannot claim all your cars as partly official, partly personal. Any one car will be treated as partly official, partly personal, for which we are going to charge a flat amount. Rest all the other cars you will have to show as fully personal. Now, which car you are going to claim as partly official, partly? The actual cost of the car is much. Expenses are too much. Very less recovery will give you more taxable value. That car you claim as partly official, partly personal. For that, a small amount taxable will be better for you. Yes or no? For other cars, cost is less, expenses met are less, recovery is higher, showing a less taxable amount. Show those cars as your partly official, partly personal. Getting my point, everyone? So if pool of cars is there, pool of cars means employer has given more than one car, and the expenses of all those cars are met by employer. You cannot call all the cars as your partly official, partly personal. Only one car you can claim as partly official, partly personal, and remaining all the cars will be deemed to be personal, and their value will be taxable as if they are used personal only. Yes or no, everyone? So this was your pool of cars. Please pay attention. Motor car owned or taken on hire by the employer, meaning car belongs to employer, and running and maintenance expenses of such car is also made by employer. So employer is giving you car also, employer is meeting the expense also. More than one such motor cars are provided to the employees, known as pool of cars. Any one motor car can be valued as partly official and partly personal. Remaining motor cars, all the remaining motor cars shall be valued as fully personal motor car. That's what I have just now explained. Yes or no? Now see, note number 4. Please read. Please read note number 4 and let me know, have I explained something like this to you? The very beginning, while telling you what the difference between perquisite and allowance, that time only I have explained. Sir, this is employee going to jail. No, this is office. This is not jail. As good as jail only. What difference does it make? But no, we will not call it jail. We'll call it office. So employee going to office, coming back from office. This is known as fixed travel. This is known as fixed travel distance between residence and office. Office and residence. To meet the cost of this travel, to meet the cost of this, employer giving you 5,000 rupees per month. Is it a personal benefit or it is an allowance? If you are a handicap employee, 3,200 exempt and the balance 1,800 taxable. And if you are a normal employee, full 5,000 will be taxable. To meet the cost of this journey, if a fixed amount is given, that is allowance. But see, car will come to your house, sit in the car will take you to the office, get down in the office, work, again the car will come, sit in the car will take you to the home. Office to residence, residence to office, money is not given. Car is provided, facility is provided, and the monthly value of this benefit is 5,000. Sir, out of 5,000 I was handicapped, so I did 3,200 exempt. Yes or no? Gone. This is not an allowance. Even though they are giving you a monthly value, they have calculated the value for the full year. Per month value is 5,000. But that value they have calculated per month is for a perquisite. That 5,000 you are not going to get in your hands to meet the cost of this traveling, because you are not supposed to meet the cost of this traveling, but you are getting the facility. You are getting conveyance facility, you are getting transport facility, you are getting motor car facility for travel between office to residence. That is not an allowance. That is a perquisite. And if you get this type of perquisite, the value is fully exempt. 5,000 per month, which was calculated, no, fully exempt in the hands of all employees. Sir, even if I am not a handicap, yes, all employees means what? Whether you are handicapped or not a handicap. Yes or no? For all the employees, the value will be fully exempt. But sir, they had given 5,000 per month, no. I have exempted only 3,200 because handicap employee was there, no. First of all, this was not an allowance. It was a perquisite. And if this type of perquisite is given, whatever value of benefit is there, that will be fully exempt. Okay. So to commute or to do the transportation, a fixed monthly amount is given by the employer. That will be known as commutation or transport allowance. For handicap employees, it is exempt, whether he is following 115 BSE or not following 115 BSE. Do you remember that? And for other employees, it is fully taxable. But if for this commute, for this transportation, if the employer is providing you a motor car facility, conveyance facility, or transport, that is not allowance, that is and the value of this perquisite will be fully taxable, value will be nil in the hands of all employees. Whether you follow 115 BSE or you don't follow 115 BSE will not make any difference. Understood? Let's come talk about servants. Second perquisite. Clause 3, 5 perquisites. One perquisite, motor car facility, done. Motor car facility, whatever value you have calculated will be taxable only if you are a specified employee. But wait. The motor car is owned by the employee. If the motor car is owned by and the expenses are met by the employer, and that motor car is used only for personal purpose, then that value which you calculate will be taxable for all employees, whether specified or non-specified. Other than that, whatever value you have calculated will be taxable only if the employee is a specified employee. I will show you. Here, motor car owned by the, expenses met by the, and motor car used only for, only then this value will be taxable. The case of specified as well as non-specified. Rest everywhere. Can you see rest everywhere? Whatever value you have calculated will be taxable for you only if you are a specified employee, not taxable if you are a non-specified employee. Hello? And even this value, even this part C value will be taxable if you are a specified employee, not taxable if you are a non-specified employee. Getting my point? Hello, sir. Next one. Now see, domestic servants. Domestic things are there. See, if domestic servant is there, I have engaged. Who am I? Your employer, no? I'm your employer. I have engaged domestic servants. Just like you are my servant, you are my employee. He is also my servant, he is also my employee. I will tell one of my servants to go and work for my another servant. All the employees are my servants only. Hello, don't feel bad. Okay, no? Just an example. Master-servant relationship between you and me. Employer-employee relationship between you and me. I have employed you. Just like that, I have employed some servants also. Like cook is there, gardener is there, personal attendant is there. Yes or no? Cleaners are there. Those servants, domestic helps, I have given them employment. Just like you are the employee of my company, he is also the employee of my company. So the domestic servants are engaged by. Now these domestic servants are provided. Then it is clause 3 perquisite. Then it is benefit in the hands of specified employee, taxable for specified employee. So value of this perquisite will be determined and will be taxable in your hands if you are a specified employee. Understanding what I'm trying to tell you? So what value will be taxable in your hands? If your employer has engaged domestic servants and these domestic servants are provided to you, benefit is happening. This is a clause 3 perquisite. So how much value of this perquisite should be taxable for you? Simple. Whatever salary I have paid to these domestic servants, if I would not have paid, you should have paid. Are you paying this? No. Is it your benefit? Yes. Minus, I will recover some amount from you. Let's see, I'm providing domestic servants to you. Their entire salary I will pay. Don't worry, but you give me only 1,000 rupees per month. So the domestic servants, I will pay them what? Salary. That is your benefit. Why? Because you don't have to pay this. Getting my point? Minus, if I will do some recovery from you. So, a domestic servant which I am providing, that domestic servant, I am paying how much salary? 2,500 per month. How much? If I would not have paid, you should have paid. Are you paying this 2,500 per month? Or you are saving it? Is it your benefit? So 2,500 is your benefit. But out of that, the moment I am providing this servant, am I recovering 1,000 from you? So benefit of 2,500 is given and 1,000 is taken back. How much is your benefit? Multiplied by number of months for which the servant was provided. Example, servant was provided for the full year. Multiplied by 12. 18,000 will be taxable. This is rule 3, sub rule 3. Rule 3, sub rule 3. This value you will calculate like this. And the value will be taxable in your hands only if you are a specified employee. Only if you are a, what if you are a non-specified employee? Then this value need not be calculated, fully exempt. Understanding? But now I will twist the case. Listen to me carefully, otherwise you will commit blunders in the exam. Your domestic servants you are engaging on your own. By providing, you are going and searching your servants. Sir, the servants provided by you, I don't like them. I will engage my servants on my own. Now, I am not the employer of those servants. You are the employer of those servants. You have engaged them. Just do one thing, sir. Their salary you reimburse. Their salary you pay. Who has engaged these servants? Salary of those servants paid by employer, reimbursed by employer. Isn't it a personal benefit? Isn't it a personal benefit? This is not covered by clause 3. Clause 3 covers only the first situation which I have told you. What? Servants engaged by employer and provided to the employees. Only this will be covered by clause 3. Taxable only in the hands of specified employee. And Amulya, tell me one thing. If you have engaged your servant, and their salary, monthly salary was 2,000 rupees. How much? And I am paying that 2,000, or you pay, I will reimburse that 2,000. Isn't it a personal benefit for you? Yes or no? Isn't it a personal benefit for Amulya? Fully taxable. Amulya says, sir, I am not a specified employee. So what? Not a clause 3 perquisite which I am giving you. The clause 4 perquisite. Your obligation met by employer. I am not providing you servants. This is not clause 3 perquisite. So you cannot say that, sir, I am not a specified employee. I am a non-specified employee. Don't charge this. Even if you are a specified employee or you are a non-specified employee, the servant's salary engaged by you, paid by your employer or reimbursed by your employer will not be clause 3 perquisite for you. It will be clause 4. It was your obligation because you were the employer. You have engaged. And your obligation, your liability is met by your employer. Clause 4, do you remember? any obligation, any liability of the employee met by employer. It's a clause 4 perquisite. And by the way, clause 4 perquisite are taxable for all types of employees, whether the employee is a specified employee or a non-specified employee. Will you remember this? Here there will be no valuation. Whatever amount I have paid or I have reimbursed will be a benefit for her. Fully taxable. Now in the exam, no, don't see the servants. See who has engaged. And 100% they are going to catch you this time in these points. Because there was an amendment, no? 4 lakh rupees. Now in the examination, they will put a case. Like the employee's net cash salary for the full year was only 80,000. Net cash salary is only 3,80,000. Employee is not the director of the company. Employee is not a substantial shareholder in the company. And employee is any other employee. But the net cash salary for the full year is, how much salary Amulya has? 3,80,000. Now this employee has engaged 2 servants. This employee has engaged 2 servants, domestic servant. One is cook and one is personal attendant. Yes or no? One is cook, one is personal attendant. Why are you laughing so much? Cannot. Hello? Okay. So for one servant, she is giving a salary of rupees 1,000. Per servant, how much salary? 1,000. Servants? 2,000. Multiplied by 12. 20 paid by the employer. Paid by the, or employee is paying, employer reimbursed. Specifically given, the net cash salary is less than 4 lakhs. Employee is a non-specified employee. Specifically given in the question. We'll say servants. Servants. Value is taxable only if specified employee. Employee is non-specified. Value will not be taxable. Gone. Full marks gone. Why? Because you were thinking that the benefit is clause 3. But this benefit is not clause 3. This was benefit under clause 4. It was your obligation met by employer. So whatever obligation of the employee met by the employer is a perquisite, and this is not a perquisite under clause 3. This is a perquisite under clause 4. So even if the employee is a specified employee or a non-specified employee, will be taxable in the hands of the employee. Yes or no? So here what you should have done? You should have taxed the entire 24,000 in the hands of employee, saying that this is not a perquisite under clause 3. Servants are not provided. This is a perquisite under clause 4. Employee's obligation met by employer, irrespective of the fact that whether the employee is a specified employee or a non-specified employee, the benefit should be fully taxable. Hence, the benefit is fully taxed. But if same question they will turn, 3,80,000 net cash salary. So 3,80,000 net cash salary. The bracket they will write non-specified employee, and they will say employer provides servants whom employer pays a salary of 1,000 per month. 1,000 to 12, 24,000, and for which the employer recovers 500 per month each. So 500 for one servant, 500 for another servant, 1,000 into 12. 12,000 employer recovers. So benefit is 24,000. Out of that, employer recovers 12,000. 12,000 is the benefit. This benefit would have been confirmed taxable in the hands of employee if she would have been. But unfortunately, question says that she is not a specified employee. Hence, benefit will not be taxable in her hands. Why? Because this is a clause 3 benefit, meaning that the servants were not engaged by the employee. Servants were engaged by employer and provided to the employee. Yes or no? Will you remember? Now I am giving 5,000 rupees per month to Amalya, saying that keep your servants from this 5,000. Yes or no? What is this? 5,000 rupees per month. Amount is given to keep the servants. Now she can use that 5,000 for any purpose. Am I giving perquisite? Am I giving any benefit, or I am giving money? Money for a purpose, and that also fixed amount on a regular basis. That is allowance. Fully taxable. Fully. Now out of that 5,000, she is actually spending 4,000 on the servants which she has engaged. So amount spent is how much? Ignore. Because entire 5,000 is taxable. Any amount out of that allowance spent for engaging the servants not allow you to take any deduction or exemption. Understood? Read this part. Come on. Who is this? Engaged by the and provided to the, then it is clause 3 perquisite. You will do the valuation as per 3D. What is the valuation? Salary paid to such domestic servant by the employer minus recovery from the employee, if any, taxable in the hands only of specified employee. But if the domestic servants are engaged by the, then it becomes the liability, then it becomes the obligation of the employee, and salary of such servants paid or reimbursed by the employer, meaning liability of the employee, obligation of the employee met by employer. Then it will not be clause 3, it will be clause 4 perquisite. So whatever salary of such domestic servant paid or reimbursed by the employer, this entire amount will be the taxable value. No need to do this kind of valuation. Yes or no? Rule 3 sub rule 3 is not applicable here. Rule 3 sub rule 3 applies only if it is clause 3 perquisite. So whatever amount given will be fully taxable. Taxable in the hands of specified as well as non-specified. Note, fixed monthly amount 5,000 per month given by the employer to engage domestic servant, known as servant allowance, fully taxable. Out of this servant allowance, amount actually spent out of such allowance to engage domestic servant has to be ignored, because on the basis of this amount spent, you're not going to get any exemption or deduction. Why? Because the servant allowance is fully taxable. Understood or not? Next one. Now, if you have understood this part, now this difference between clause 3 and clause 4, now it will be very easy for me to make you all understand this part also. Wait. Gas, water, electricity provided by the employer. Clause 3. Clause, but gas, water, electricity bills of your name paid by the employer, reimbursed by the employer is not clause 3. It was your obligation met by the employer. You are purchasing gas, water, electricity on your own. Bills are coming on your name. Who is liable to pay? Employee. So pay, no. You are paying, and then later on I am reimbursing. Or I am only paying those bills. But the bills are not on my name. Those are not my liabilities. The bills are on your name. Gas bill, water bill, electricity bill. Yes or no? These are your personal expenses. And you are liable to pay for these personal expenses because the bills are coming on your name. You are going and buying gas. You are going and buying electricity and water. Hence, the bills are issued on your name. So that was your liability, your obligation. You should have paid that. Are you paying it? Yes, you are paying it, but later on I am reimbursing. Is it a benefit? Yes, full personal benefit. But this is not clause 3. Clause 4. Employee's obligation met by employer. Or you don't pay, I will pay. Give me just give me your bill. So bills which are on your name, I am taking those bills and I am paying those bills. This is clause 4. Employee's obligation met by employer. So how much will be your benefit? How much will be your benefit? The amount which I pay or amount which I reimburse is your benefit. Fully taxable. No need to do any valuation. No need to apply any valuation rules also. And by the way, this is clause 4 perquisite. Clause 4 perquisite. If you are a specified employee or a non-specified employee, it will be fully taxable. It will be fully. But what if gas, water, electricity is provided by the, now tell me on whose names the bills will be? Yes. Your employer is buying and providing. Either the employer will buy and provide or he will manufacture and provide. Then it will be clause 3 perquisite. Can your employer generate electricity? How? Electricity company will generate cow dung or electricity. What this company will generate? Electricity, no? And you are the employee of this electricity company. So can your employer generate electricity? Manufacture electricity, gas and water? HP Gas is there. HP Gas, big company. HP, Hindustan Petroleum, manufacturing gas. What it will manufacture? Cow dung. Gas only, no? And you are the employee of HP. So can HP provide you gas? Yes. Which HP will manufacture? So your employer can provide you gas, water, electricity from own resources after manufacturing. But our employer is not manufacturing. Employer is manufacturing shoes. So if I will manufacture shoes, can I manufacture? No. So my business is some other business. Hello? Can I provide you from my resources? No. Because I'm not manufacturing gas, water or electricity. So now what I will do? I will purchase from others to give it. So either the employer will purchase from others. Bills will be on the name of employer. Or the employer will manufacture and provide. In this case, it will be clause 3 perquisite. Provided by the employer. Provided from own resources. Provided after purchasing from others for my employee. I will tell others that, see, I have many employees staying in my houses. I have provided them accommodation. You remember that factory where I went for audit, Ultratech? In that factory, different accommodations were there. For all those accommodation, electricity connection is required. Gas connection is required. Water connection is required. Who will take those connections? Employer on his name to provide to the employee. Will you live in the accommodation without water, without gas, without electricity? Will require these things, no? So to provide you gas, water or electricity, employer is procuring that from others. So electricity connection, these houses on my name. Gas connection, water connection is on my name. I am purchasing from outside and providing. Or I can manufacture also and I can provide. Understanding? Clause 3. The clause. Now, I am providing gas, water or electricity. Is it a personal benefit for you? Clause 3 benefit for you. How much benefit will be taxable? Valuation. Rule 3, sub-rule 4 says that if it is provided from own resources, employer manufactures and provides. Employer manufactures and how much will be the taxable value for you? Cost of production. So whatever cost of production I have incurred for the number of units which I have provided. So if I have provided gas, water, electricity, I am manufacturing and I am providing. So whatever number of units I am providing, what was the manufacturing cost? What was the production cost of those units to me? definitely this much amount at least you should have paid if I would have charged this amount from you. Yes or no? This will be taken as your benefit. I'll forget about my profit. Government says that we'll forget about the profit of your employer because he is manufacturing and providing. So he will give you cost to cost. He will not charge any profit. But at least he will recover the cost, which he is not recovering because this is provided. Getting my point? So the provisioning of gas, water, electricity from own resources, how much amount would have spent? At least the cost of production the employer would have recovered. That amount you should have spent, which you are not spending. That is your benefit. Minus if the amount, some amount is recovered from the employer. And what if employer is not providing from own resources? Then purchasing from outside, purchasing from and making the payment. If employer was not making this payment, you should have made this payment. You are not making, which is your benefit. That amount be your benefit. Minus if some amount is recovered from. So if the gas, water and electricity, if gas, water and is provided by the employer, it is a perquisite under clause 3. How much value will be taxable? Rule 3(4) says that if it is provided by the employer from own resources, the cost of manufacturing to the employer will be taken as your benefit, minus amount recovered from you, if any. And if the employer is purchasing from outsiders for the employees, then whatever amount of purchase price which is paid by the employer will be taken as your benefit. Because if the employer was not paying this, you should have paid this, minus the amount recovered from the. So this is the valuation. We'll do as per rule 3(4) only if the perquisite is under clause 3. And this value will be taxable only if the employee is a specified employee. This way, here, this side. Not a perquisite under clause 3. This is the perquisite under clause 4. Bills of the employee paid or reimbursed by the. Now there was no employer's obligation. Your obligation met by employer. Clause 4. What is the taxable value? Actual amount paid or reimbursed by the employer will be taken as your benefit. And what will be the taxability? It will be taxable in the hands of specified as well as non-specified. All the employees. Yes or no? Your monthly water bills, gas bills, electricity bills are paid by employer. Whatever may be the amount employer will pay or employer will reimburse. Whatever amount he pays or reimburses will be taken as your benefit, fully taxable in your hands. Whether you are a specified employee or a non-specified employee. Understood or not? Next one. So let's go. Let's start. Accommodation facility. How many perquisites we have completed? Accommodation we have completed. Taxable for all employees. Taxable for whether specified or non-specified. Yes or no? Clause 3, 5 perquisite. Motor car facility we have done. Servant, no, provisioning of servant. Servant engaged by you will not be covered. Provisioning of servant. And third, gas, water. No. Provisioning of gas, water, electricity. Yes or no? Now we are doing. Can the employer provide educational facility to the employee? Yes. For employees, children also can be provided for other members of the household of the employee. For these other members also, the educational facility can be provided by the employer. Now tell me, educational facility means what? Your children will come, sit in my office, I will teach them. Sir, you are teaching? No, I am an employer. Here I am a teacher, no. But otherwise I am an employer. So will I teach your children? Will I teach your household members? No. But I can have a school which is owned and maintained by me. Hello? There, send your students. Send your children. And household members, no. Send them in my school. because your employer owns and maintains a school. In your school, in my school, your children will study. In my school, your household members will study. Isn't it a benefit for you? Whatever cost will be there now, I will bear that cost. Don't worry. But sir, what if the employer does not have a school or college, etc.? Then no, not like that. Wait. Employer will have some arrangement in some school. I don't have a school, no. But in the nearby area, if there is a good school, I will go and book some seats for the children or the household members of my employees. I will go and tell the school, please reserve 500 seats. Please reserve. And for those 500 seats, I am giving you a payment. On those 500 seats, give the admission to my employees' children and their household members. So school or college can be a school or college where employer has some arrangements like this. So in this school, your children are studying. Possible, not possible? Tell me. So institution. Can I say educational institution? Educational institution means it can be a school, it can be a college, it can be a university, any educational institution. Yes or no? So any educational institution. If this educational institution is owned and maintained by whom? By the employer. By the, or where the employer has some arrangements. See, educational institution can be any other educational institution also. We'll talk about that institution later on. Yes or no? Right now, let's talk about these two institutions. Whose school is there? Employer school, owned and managed by employer. Or employer will have some arrangements. Now in this school, educational facility is given for whom? Employees, children, or employees, other household members. HHM means household members. Yes or no? Now see, in this school, if in a school like this, your children are studying, so whatever cost of their education is there, who will meet? Employer. So can I say employer will meet the cost? Employer will meet the cost of their education. Amount actually spent by employer on education in such type of institution. Yes or no? Tell me, is it your benefit? Whatever amount I will spend in my school, no, like peanuts, very small amount. A school where I will have some arrangements, no, just imagine I have booked 500 seats. Every discount per student they would have given me. The amount which I will actually spend here in my institution or an institution where I am having an arrangement, the amount which I am spending, no, very less amount. Nearly no cost only. In my school, your kids are studying, I will incur very less cost on their education. In a school where I am having some arrangement and there your kids are studying, I will incur very less cost because that school must have given me heavy discount. The amount which I am actually spending on the educational facility of your children in such type of school is a very less amount. This is not your benefit. This cannot be taken as your benefit. Amount actually spent by employer in such type of institutions cannot be taken as your benefit. Benefit is something else. Now tell me, if this school was not there, if this school was, where you would have sent your children? Other school? 500 kilometers away? Or in the same locality? Or nearby locality? So if the employer is having his school or a school where some arrangements is there, if this school was not there in this area, your children were not studying in this school, then definitely your children were studying in a similar type of school in or nearby that area. In this area, any other school is there? Or in the nearby area, any other similar type of school is there? See, for example, if this is CBSE board school, that other school should also be CBSE in the same area or in the nearby area, nearest area. In that CBSE board school, it's a similar type of school. If employer school was not there, a school where the employer has some arrangement, if this school was not there, definitely you would have sent your children to that school. Understanding? And if your kids would have been studying in that school, per student, some cost that school would have charged. That is a reasonable cost of the education of your children that you would have spent. You are not spending, you are saving because your children are not going in that school. Your children are studying in your employer school. So because your children are studying in your employer school, what benefit is having? What benefit you are having? You are saving the cost of reasonable cost of their education which you would have spent in a similar type of school. Yes or no? If the children would have been going there, monthly fees would have been 1800 per month. How much? And in this school, employer incurs only 500 rupees. Because it is employer school, no? Or a school where the employer has some arrangement. So how much employer is spending? 500 per month. How much employer is spending? Is it your benefit? Is it your benefit? No. Because this is the amount actually spent by the employer on the education of your children. This is not your benefit. If your children were going in a similar school, studying in the similar class there, same class there, yes or no? Then the cost of the education would have been 1800 per month, which you are not spending, which you are saving. The education cost who should have spent in the similar school in or nearby the same locality, this educational cost you are not incurring. You are saving this 1800 because your employer is providing educational facility in this school. So this amount which you are saving, known as what? Reasonable cost of education. This should be the cost of education of your children, which you should have spent, which you are not spending, you are saving. So this should be your benefit and not the amount actually spent by your employer on the education. Understood or not? Tell me yes. Should I move ahead? Now can I say this is the reasonable cost of education for your children? They are saying that if the reasonable cost of education for your children is 1000 rupees per month per child or less. So the benefit is what? Reasonable cost of education. Yes or no? If the reasonable cost of education for your children, reasonable cost of education for your children, which was your benefit, if that benefit is 1,000 rupees per month per child or less, fully exempt. Nothing will be taxable. Then rule becomes silent. What if it is more than 1,000? How much should be taxable? Nothing is spoken by the rule. In that case, no. One thing is sure. If it is up to 1,000, not taxable. If it is not taxable, definitely if it is more than 1,000, then it is. How much should be taxable? Tell us now. Police will not say anything. So bloody rule, if you will not tell anything, we are free to assume anything. Either we will charge the full amount. That is also correct. Or we can charge amount in excess of 1,000. That is also correct. Who tell us what to do if you are not saying, so we are going to tax that benefit. But how much we are going to tax, that now depends on our understanding. We think that you want to give 1,000 rupees exemption, so we'll take 1,000 rupees of exemption and the excess we will charge. Or alternative, you said that it is exempt only if it is up to 1,000. If it is more than 1,000, you did not say anything, so we are charging full amount. Both the views are correct. Both the views are correct. Understanding what I am trying to tell you. So if, tell me, there is a school owned and maintained by employer, or where the employer has some, in such type of school, education facilities given for employees' children. Employees. And on this educational facility for employees' children, amount is spent by the employer. That amount, whatever spent by the employer, will be ignored. That is not your benefit. You will have to determine the reasonable cost. You are supposed to determine the reasonable cost. Now, reasonable cost means the amount, the cost of education for your children in similar type of institution in or nearby the same locality. That is reasonable cost of education. Now that reasonable cost of education will be taken as your benefit. And if that reasonable cost of education for your children, reasonable cost of education, which is a benefit for your children, if it is up to 1,000 per month per child, 1,000 per month per child or less, fully exempt, fully exempt. But in our case, how much it is? Is it more than 1,000? Now what to be done? How much to be taxable? The rule is silent. So what we can do? We can either charge 800, yes or no, or we can charge full 1,800. Both the views are correct. Just give a note for alternative treatment. Since the rule is silent, that how much amount should be, how much amount of reasonable cost to be taxed if it exceeds 1,000 rupees per month per child. In the above solution, we have charged the excess amount. Alternatively, the full 1,800 can also be taxable. This type of note you are supposed to give in the, you be able to do it. Now this amount is taxable. Whatever taxable amount will be there, from that, reduce the amount recovered. Reduce the amount, because your employer might be recovering some amount also, no? So per month, if the employer is recovering 500 rupees, how much? So how much you have shown taxable? 800 or 1,800, as the case may be. From that 500 per month you will reduce, because that benefit employer is taking away. Understood? Understood? 1,000 rupees per month per child. So what you are going to do? First of all, you will have to find out the reasonable cost of education. Reasonable cost of what? Education. That reasonable cost of education, if it is up to 1,000 PMPC, what are you going to do? Fully exempt. And what if it is more than? What if it is more than 1,000 PMPC? Then excess can also be taxable. and full amount, entire value of reasonable cost can also be taxable. Sir, what should I do? Do anything what you like. Both the views are correct. But whatever taxable amount you have calculated, out of that, reduce what? Reduce the recovery, if any, made by the employer for giving education to your children. Now, whatever discussion I have made, no, you will not realize education institution is this one. Educational facility is provided for employees' children. Then this treatment you are supposed to give. Now, just imagine same educational institution owned or maintained by employer. Possible? But in that educational institution, now the educational facility is given for other household member. Meaning, instead of my son, instead of my daughter, now my brother is studying. My sister is studying. Possible, not possible? Tell me. Now, any other household member other than my children are studying in that school. Same thing, same logic. Will the employer incur amount? Amount actually spent by employer on education of your household member. So for the education of your household member, employer will spend money. Don't you think in this school, whatever money he will spend will be very less? Should not be taken as your benefit. So in this case also, you are supposed to what? Ignore. You are supposed to. And here also, you will have to find out what? Reasonable cost of education. If your brother is studying in standard 8th in employer school, if employer school was not there, some similar school would have studied in standard 8th. And in that school, what was the cost of education? That is the reasonable cost. That you are not spending, that you are saving. That should be your benefit. Now this reasonable cost of education which you have calculated, have you calculated this for your children or any other household member? Even if it is 1,000, less than 1,000, more than 1,000, any amount, fully taxable. 1,000 rupees per month per child exemption is not available from this reasonable cost, from this benefit. It is exempt only if the reasonable cost, the benefit is for children of the employee. Children. How many children? Any number of children. 1,000 rupees per month per child exemption for reasonable cost of education is not given for 2 children only. Any number of students. Any number of children. Yes or no? If you have 1 child, then for that 1 child, 1,000 per month per child is exempt. For 2 children, 1,000 per month per child, exempt for both. For 3 children, for all of them exempt. There is no limit of number of children. Getting my point? For all the number of children, for all the children, reasonable cost of education up to 1,000 per month per child will be exempt. But it is exemption given for your children and not for your household members, other household members. So if the reasonable cost of education is there for any other household member, this is a benefit. This will be fully taxable, whatever may be the amount. Even if it is 500, even if it is 700, even if it is 1,000, even if it is 5,000, whatever amount, it will be fully taxable. Minus amount, if any, recovered from the employee. The balance will be taxable. Entire valuation you have done, valuation you do only if the employee is a specified employee. In the case of non-specified employee, this valuation is not applicable because the benefit is not taxable. This is the valuation done by Rule 3, Sub-Rule 5. Rule 3, 3.1 you remember? Accommodations. 3.1, 3.2, motor car facility. 3.3, provisioning of domestic servants. 3.4, provisioning of gas, water, electricity. That own resources, purchase from others. That was rule 3, sub rule 4. And here whatever I am saying is rule 3, sub rule 5. This is the way in which the value of this educational facility should be calculated and should be taxed in the hands of employee. Yes or no? But employee should be specified employee. Only then this valuation will happen. Now tell me, can the educational institution always be like this? Or any other educational institution can also be there? So, any other educational institution can also be there? Your children are studying in that institution. Possible, not possible? Now that is not clause 3. Automatically you will go for clause 4. Your employer is now not providing educational facility. Now he is just meeting the education cost in any other institution. So now that educational institution is not owned and maintained by employer. Neither the employer has any arrangements. Then in that educational institution, if your children are studying or your household member are studying, whatever cost the employer will incur will be the reasonable cost only, no? Whatever that institution will charge from you, the employer will reimburse, or whatever that institution is charging, the employer will pay. The amount actually paid by the employer, amount actually reimbursed by the employer in that institution will be entirely your benefit. And if he would not have paid, who would have paid? That was your obligation. Yes or no? Fully taxable. And if some recovery he is doing, reduce that. Fully taxable. Whether you are a specified employee or a non-specified employee. Will you remember this? Perfect? Okay. Pay attention. See here. See. Educational facility is a perquisite under 17 to 3. The value you have to determine as per rule 3, 5, and that value will be taxable in the hands of employee. This facility can be given for employees' children or for other members of household. If the educational facility is provided in any educational institution owned and maintained by the employer, or where the employer has some arrangement, what will be the taxable value? The actual amount spent by the employer in such institution for the education of children or household member? No, this actual amount cannot be taken as benefit because this will be very less. So what you are supposed to do? You are supposed to find out reasonable cost of education in a similar educational institution or in or nearby the same local. And this reasonable cost of education which you have determined for employees, children up to 1,000 per month per child, then it is fully exempt for any number of children. Yes or no? And if the reasonable cost of education for children is more than 1,000 per month per child, what is to be done? Silent. Then either the excess can be taxable or full amount can be taxable. Both the views are correct. So whatever amount you are making taxable, out of that, recovery, if any, will be reduced. Yes or no? Hello, sir. Now see, this reasonable cost of education which you are calculating as per rule 3, sub rule 5. And this will be taxable in your hands only if you are a specified employee. But if you are not a specified employee, this valuation is not to be done because this value will not be taxable in your hands. No need to do all such things. Yes or no? You are a non-specified employee. But if you are a specified employee, this entire valuation you will do and you will charge the benefit. In the hands of that specified employee. Yes or no? Now pay attention. If educational facility is provided in any other educational institution, meaning that institution is not owned and maintained by the employer and where the employer has no arrangements. So what will be the taxable value? Amount actually spent by the employer in such institution for the education of employees' children or other household member. That will be fully taxable for you. Remember, 1,000 rupees per month per child exemption you are not going to take here. That is only with regard to reasonable cost. Under rule 3, 5. This is not rule 3, 5. This is clause 4 perquisite. Full amount of benefit will be taxable in your hands. Getting my point? Whether it is for children or for other members, The actual cost will be fully taxable, whether the employee is a specified employee or a non-specified employee. Do you remember this? Or should I move ahead? Educational facility, done. But 3 to 4 important points should keep in mind. See, if educational facility is provided, that is understood for children or household members. Sometimes, no, what is done, that the employer spends some cost for training or refresher management course of the employee. Possible or not? So your employee, for your training, the employer will spend some money. Or for refresher management course, the employer will spend some money. Isn't it a personal benefit for you? You are getting training, bloody cost I am meeting. Your refresher management course, you are learning, cost employer meeting. Is it a personal benefit for you? No. This cost I am not incurring to give you any personal benefit. Bloody, this cost is incurred for myself. Because without training, will you be able to work for me? I have to get you trained. Only then you will be able to work for me. Yes or no? So the training expense which I am incurring, I'm not incurring for you. I'm incurring for myself. And how an amount which I'm spending for myself, how that amount can be treated as your personal benefit? Fully exempt. Fully exempt. Benefit is not taxable in the hands of employee. But refresher management course, what is that refresher management course? Sometimes what happens, no, you are working at a particular level. Okay. Now, automatically, after few years, you'll get promotion. And now, after getting the promotion, you are at the higher management level. Now, there you will have to take managerial decisions, you will have to manage people, but you don't have that, no, managerial skills, that how to handle people, how to manage these many people at this level. You have reached this level after certain number of years of experience. But to do these kind of managerial stuff, the stuff which the higher management does, could be knowing the management skills also. To polish your management skills, which you would require to work at that level, refresher management course are done. Refresher management course. Some management lessons you might have learned long back, your MBA. Now, after so many years, many management lessons you would have forgotten. Do a refresher course. And yes or no? Will help you do your activities better for me. So that course which you are doing, not for your benefit, for my benefit, for the benefit of your employer. And on that course, if the employer is spending some money, is that money spent to give you personal benefit or for my betterment? If I am spending money on training, on refresher management course, only then you will get the training, you will get that management, you know, management exposure. Only then you will be able to work efficiently and properly for the employer. And that is the reason why that cost is incurred. That cost cannot be treated as your personal benefit. It is fully exempt. Taxable value will be nil. Taxable value will be nil. Understood? First note. Read this first note. Cost of training and refresher management course of the met by, will it be a personal benefit for the employee? No, fully exempt. Taxable value nil. Yes or no? Now, sometimes periodicals and journals. No, periodicals and journals, magazines. Regular basis, some editions will come, and in those magazines, those periodical journal, get lot many things to read. Now, the cost of subscription, what did I say? Of these periodical journals, meaning magazines, the cost of subscription of the magazines are given by the employer. Isn't it a personal benefit for you? No, if these periodicals or journals are professional in nature, because these would be required by you to perform your duties better. So if The periodicals or journals, meaning magazines of the employee, the cost of subscription of those magazines are met by employer, and if these magazines are professional in nature, then it is not a personal benefit, fully exempt, taxable value will be nil. But if the magazines are personal in nature, not professional journals, not professional magazines, yes or no, personal nature, meaning Champak is there, Safari is there, might not have heard about these names. Comics are there for your kids. When we were kids, we used to read comics. We used to read one Champak, Tinkle. Tinkle is also there. So there are different types. For my kids, Tinkle, Champak, all these small types of magazines are there. Comics are there. Periodically, their editions will come. For that, the employer is meeting the cost. Now that is not a professional periodicals or journals. For my parents, for my wife, if the employer is meeting some cost of subscription of personal nature magazines, periodicals and journals, yes or no, then that will be treated as a personal benefit for me. That will be fully taxable. But if some professional nature journals are there, magazines are there, then they are required for your knowledge. And that knowledge which you will take, will be using it for the benefit of your employer. That I am not doing with an intention to pass on a personal benefit. It is required. If you take that knowledge from those magazines, professional magazines, then that knowledge you are going to apply for my work only. Yes or no? So that will be fully exempt. Taxable value will be nil. Will you remember this? Small things, no? Like this, they ask in the exam to make the paper difficult. Students, start complaining. That's our paper was very difficult, very technical, this, that. Why they feel that the paper was difficult or technical, You only, you will take the January paper after I finish the syllabus. Not right now. Take the January paper after I finish the syllabus. And then you will see each and everything which is there in that January paper. No, every damn single thing I speak in my lecture, that is in my notes. I get to so much of detail. And if majority of the students have felt that paper was tricky, paper was difficult, not at all tricky, not at all difficult. If you have studied properly, and if you have studied these small things properly, if you don't pay attention to these things, no, and these things will pop up in the exam, you'll say, oh my God, the paper was very technical. Technical slaps you will get from my side. You will say that the paper was technical. Understanding what I am trying to tell you? You cannot argue or you cannot complain that the institute is setting a difficult paper. Bloody, they are not setting it outside your syllabus. Whatever is there in your syllabus, from that syllabus only they are asking. And if you are not reading it properly, you are not studying your part properly, then definitely any type of paper will be there that will be difficult for you. Right now you are saying that the paper was tricky. It was tricky. Why? Because the language was too. It is a little bit lengthy, but cannot complain as a student. It is up to the examiner that how he wants to test you. This time he wants to test you in this way, that how much in-depth knowledge you are having, and in that limited time, how much maximum paper you can attempt. They are going to test you for many things. Out of that test, one test is in the limited time of 3 hours, how much paper you can attempt. Even the institute knows that at least 4 hours time is required to solve that paper, but deliberately that paper is given. They want to see that what type of caliber the students are having. If you can attempt 70 to 80 marks, decent. Less than that, that means you require more polishing. You require more, practice. Come back next time. Less than 40. Understand these things. So whatever I am saying in the class, each and every point will make sense at the time of solving the question papers. You cannot even say that, okay, this point is okay, no. Not that much interest. I will not pay attention. Don't pay attention. You will see stars in daytime. 100% I'm telling you. The stars will be revolving around you. The exam hall. What you should do, what you should not do, you not understand anything in the exam hall. Then I will be standing beside you. Close your eyes, you will see me. And I will be smiling. Yeah, I told you no. Study, practice. You did not do it. Now, then I will elope. Because you will open your eyes, no? You will not be there in actually. But you will close your eyes, you will see me. And you will close your eyes, you will listen to my voice also. The exam. Trust me, guarantee I am telling you. If you practice well, then also you will listen to my voice. I will be there speaking, you will be listening and you will be writing. 100% I am telling you. But that thing will happen only if you will practice. And if you will not practice, I will come. I will speak also. But that time you will be listening different things from me. Dash, 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 dash. Understanding? Okay. Now see, any type of educational scholarships. Educational, have you heard that educational scholarships are also given? So if I give you educational scholarship, I am not your employer, I am a normal person. If I give you educational scholarship, is it a receipt for you? Receipt. Not an income fully exempt. There is a section 10, subsection 16 in the Income Tax Act. Section 10, subsection 16, which says that any person receiving educational scholarships from any person, if the receipt comes in the form of educational scholarship, that receipt will be fully exempt. That will not be taxable as your income. Exemption is given under which section? 10 subsection 16. For which type of receipt? Educational scholarship. So bloody, if you are getting educational scholarship, that educational scholarships are exempt. What if your employer gives you educational scholarship? For yourself, for your spouse, for your children, for your household member, fully exempt. It is given by any person to any person. Even if it is given by the employer to the employee, still it will be fully exempt. Educational scholarships are not taxable. Be exempt under 10. Yes or no? Note number 3. With this, the educational facility is over. Now, next perquisite, free or concessional travel tickets. Free or concessional? Now, who can give the travel tickets? A manufacturer or an employer having transport business. I am your employer. I'm in the transport business. My business is transportation. So even only I can give you what? Free or concessional travel tickets. Understanding? The employer is in transport sector. Have you heard about some bus company or something like that? Give me the example of any of the bus company. Red bus. That is a aggregator. In red bus, which type of bus? Intercity bus, some bus company name whose buses are running. Anyone? What? VRL. VRL buses are running. So you are the employee of VRL. You are the employee of. So your employer is in transport business. Your employer is in. Now the buses are running, no? From Bangalore to Chennai, Bangalore to Madurai, Bangalore to other places like Hyderabad. So buses are running. So your employer is in transport sector. Your employer is in running the buses and something like that. Any type of transport business, yes or no? Now your employer can give you travel tickets for yourself also or for your family members. So the travel tickets which you will get from your employer, no? Whether you are going to get these travel tickets free or you can get them at concessional rates. Both the ways possible, yes or no? So you can get the travel tickets free of cost also. You can get the travel tickets at concessional rates also. Don't you think you can take your taxable salary from your employer in this? You will tell your employer, what your employer will tell you, see, Your salary is how much? 50,000. Your salary is how much? 50,000. Okay. What I will do? I will give you 30,000 rupees salary. How much? And I will give you free tickets worth 20,000. So free tickets worth one ticket 1,000 rupees. Okay, one ticket 1,000 rupees. Like that 20 tickets I will give. I will say that I have given those tickets for your travel, for the travel of your household members. Now do one thing, then encash this. Sell these 1,000 tickets to anyone. Get 20,000. Nobody will know that you have earned salary. Have you earned salary? Yes. But that salary I have not given. I have just given you travel ticket. If it was not a benefit, if this benefit was not taxed, what everyone would have done? Sir, don't give 50,000 salary, only 30,000. Balance salary in the form of free tickets. Balance salary in the form of, I will sell those free tickets for 1,000. I will get that 20,000. Nobody will come to know I have got. Cashment can happen or not. Or, sir, do one thing, 1,500 rupees ticket you give me for 500. What ticket I will save 1,000 rupees? Sir, no. I can very well sell those tickets for 1,200, 1,300, or even 1,500 also. Yes or no? And in like this, when the tickets are not available, I can sell those tickets for higher prices. Can you encash those tickets? And if you'll encash those tickets, don't you think that much amount you are going to get? And if that amount is not treated as your perquisite, not treated as your salary, everyone will start. Every employee in the transport sector start taking the salary in this manner. Understanding what is happening here. So what they said, hello employee, come here. Are you getting travel tickets for yourself, for your household members? So whatever travel tickets you are getting, either you are getting free or at concessional rates. Under clause 3, we will treat you this as your perquisite. And the value of those travel tickets, the value of that benefit also we will charge in your hands. What will be the value, you know? The amount of the travel ticket which your employer would have charged from others. Is he charging that amount from you? No. So that will be, if you were not the employee, you would have taken these tickets at the same price at which the general public is taking. If the general public is taking the ticket at 1,000, you were not the employee, so you should have paid 1,000 for this. You are paying or not paying? Not paying. That is your benefit. Minus the amount recovered by the employer. And that balance amount will be taxed in your hands as your perquisite. Because you can very well encash this balance amount by selling these tickets. So later on, if you encash this, so this is a salary only which you should have got from your employer. If you would have got this amount as salary, you would have paid tax on this amount. But you did not get this amount in the form of salary. You took the benefit from your employer like this. Understanding? So that benefit also will make it as your perquisite and charge under the head salary. But the benefit will arise only if you are the employee of transport sector, and only then it will be taxable, provided you are a specified employee. What if you are a non-specified employee? Then this type of valuation is not required. And see, if the employer is not a transport sector employer is buying tickets from someone else and giving it to you, yes or no, then in that case the benefit will not be covered by clause 3. It will be covered by no. It will be covered by other benefits, other fringe benefits. Yes or no? Clause number 8. It will be taxable in the hands of all types of employees. If your employer is not in transport sector, still he can give you this type of benefit. But that benefit will not come under clause 3. That will go under clause 4. Sorry, clause 8. Any other fringe benefit. So in that case, it will be taxable whether you are a specified employee or a non-specified. Here we will cover only if your employer is in transport sector giving you these kind of benefits. Okay, understanding? Hello? He's eating. So when I will see there, no, when I'm looking at her, no, so that time she'll not chew. When I look there, you can eat. I don't mind. Hello? Are you understanding? Or the capacity is gone? Capacity is gone. Give me 5 to 10 minutes, I'll leave you. 5 to 10. No break. Direct. Go to home. Ah. If these kind of things come from Umang sir, it is very unique, no? See, sometimes if you don't demand and you get the things, then it is become more happy. And if you ask for the things and you don't get it, become very sad. So which is better? Don't ask. Only keep on expecting. Okay. And don't expect also, huh? Surprises are always good. Will you calculate this value? Will you calculate this value? Everyone. But this value will be taxable only if you are a specified employee and you are the employee of a transport sector. But wait. This encashment can be done only if you are the employee of transport sector other than railways and airlines. Why? Because if the railways will give you the tickets, no, or the airlines will give you the tickets, you cannot encash them. The tickets will be issued in the name of employee or his household member, has to be used by them only. You cannot transfer those tickets to someone else and encash that amount. So if this kind of benefit is given by railways or airlines, free tickets, concessional tickets provided by railways or airlines for employees, for their employees or for their employees' household members, then that benefit will be fully exempt. That benefit will not be taxable. Will you remember? So value of this benefit shall be fully exempt if it is provided to the employees of railways or airlines. But for other employees of transport sector, this full benefit will be taxable and the value will be determined in this manner. Okay. Clause 3, all the perquisites are over. Clause 3, all the perquisites are over. 5 perquisites. Okay. Now clause number 4 says that any other obligation or liability of the employee, any personal obligation or liability of the employee met by employer will be a clause 4 perquisite that you already know. A few examples. Your professional tax paid by employer. Your gas bill, water bill, electricity bills paid by employer. Domestic servants engaged by you paid by employer. Your children's school fees, college fees paid by employer. Yes or no? But in any other educational institution, do you remember that? Any type of expense of personal nature of the employee paid by employer, reimbursed by employer will be covered in clause number 4. Be covered in clause number. That's why they are saying no. Any personal liability or obligation of the employee met by the employer will be taken as a perquisite. Taxable value will be how much? Simple. The amount paid by the employer, amount reimbursed by the employer will be the taxable value of this perquisite. Few examples. I've already given these examples. Okay. Next one. Now see, there is an important note in this clause number 4 which you should be very careful of. Okay. This time I am expecting a question on this note, because many attempts they have not exploited concepts like this. So this time there can be a question which might see this type of adjustment. Now see, Your employer is there. Your employer is there. You are an employee. Okay, this is you. So you are an employee. Your employer is giving you a salary of rupees 10 lakhs. Total salary. Now, in this 10 lakh rupees of salary, no, if you'll see, 8 lakh rupees is monetary salary. 8 lakh rupees is, and 2 lakh rupees is non-monetary salary. No, sir, 8 lakh monetary be understood. Basic salary will be there, commission will be there, taxable allowances will be there, then bonus will be there. The amounts which are coming in your hands, reimbursements will be there, the amounts which are coming in your hands. Real cash, real money paid in the form of salary. But sometimes the employer will give you certain benefits. Sometimes the employer will give you certain benefits are also treated as your perquisite, and they will also be taxable in your hands. But the benefits, their valuation will be done, and that value will be taxable for you as a salary, non-monetary benefits. Like, for example, employer has given you accommodation. It's a perquisite for you. Its value will be determined. That value will be taxable in your hands as your salary. So can I say this 10 lakh rupees of salary, some value of that accommodation will also be taxable? Employer can give you motor car. Employer is giving money or he is giving you motor car. The value of that motor car will be calculated, and that value will also be taxable. Are you getting that value in your hands? But that value treated as your salary. That value is treated as your understanding what I am trying to tell you. Hello, last bench. Sir, madam. Sir, no. So, tell me, accommodation can be given, motor car can be given. Hey, do you remember that servants were provided? I am giving you money or I am giving you servants? But their value was determined, their value will be taxed. Gas, water, electricity I provide. So see, I'm giving you different types of benefits. I'm giving you different types of, I'm not giving you any monetary salary. I'm giving you benefits. But those benefits are also treated as your salary. So the value of those benefits was charged as your salary income. Now in this 10 lakhs, in this 2 lakhs is such value. Not coming in your hands was the value of those benefits which the employer is providing you. Possible or not possible? Tell me. 8 lakh is coming in your hands. So will you happy that 8 lakh only I am getting in my hands? My salary is 10 lakh. I have to pay tax on 10 lakh. Your employer will deduct TDS on your full salary. Employer will deduct TDS on your monetary salary as well as non-monetary salary. For full 10 lakh, he will have to deduct the TDS. But you will say, employer, you are giving me only 8 lakh rupees. All other benefits you are giving me. Employer is saying, those benefits, no, are your salary only. 2 lakh rupees value of those benefits treated as your salary. On that also I am supposed to deduct TDS. On full 10 lakh I will deduct TDS. Became angry. What are you doing, employer? Why are you deducting TDS on my full 10 lakh rupees of salary if you are giving only 8 lakhs in my hands? I told you, no, those benefits which I am giving you, remember accommodation, motor car, servants, those benefits which I am giving you, no, those benefits as per the Income Tax Act, your salary. So your salary is not 8 lakh, your salary is 10 lakh, including that 2 lakh value of those benefits. Oh, those 2 lakhs rupees also my salary. On that, I am supposed to pay tax. Employer, don't give me that 2 lakh rupees. 2 lakh rupees benefit. I don't want. Here are the keys of your accommodation. These are the keys of your car. And I'm bringing Ramu Kaka back. Ramu Kaka means domestic servant which you have given. Okay, Ramu Kaka, come. Stay here. Keep all your benefits with yourself. I don't want any single benefit. Because if these benefits are given, these are treated as my salary. Value of these benefit 2 lakh is taxed as my salary. So instead of not having this 2 lakh and paying tax on these 2 lakhs, it is better to have 2 lakhs and pay tax on these 2 lakhs. So employer keep the accommodation, keep the motor car, keep Ramu Kaka, keep everything. Give me 2 lakh rupees cash. And on that 2 lakh rupees cash salary, if you will deduct TDS, no, I will love it. But I hate it when I don't get that 2 lakh rupees in my hands, and on that you deduct my. You're deducting TDS on my 8 lakh, I don't mind. But you're deducting tax on 2 lakh rupees. Never came in my hands, no. Pay me that 2 lakh, deduct TDS on that 2 lakh. Otherwise, don't deduct TDS. Your employer, now fix now. Now you have started asking money instead of benefit. I accept your request. I accept your request. Yes. If I do that, what will happen, 2 lakh rupees cash outflow will increase from my hands. Now the thing, 8 lakh I was giving and getting a work done for 10 lakhs. For that same work, I will have to now spend 10 lakh rupees because I'll have to give you 2 lakh. From my working capital, I will have to take 2 lakh rupees and give it to you as a salary. It was not happening earlier because I was giving you benefits. Now, if I will accept that 2 lakh rupees will be reduced in my working capital, but you will go outside my cabin and you will start announcing it to all of your colleagues. I gave my car, I gave my accommodation, I gave back my Ramu Kaka, and I got 2 lakh rupees cash salary from your employer. All of your friends, all of your colleagues will be standing in front of my cabin. Sir, you have also given me accommodation, car. Sir, to me you have not given Ramu Kaka, it is Shamu Kaka, sir. Take everything. Give me also salary in cash. Everyone will start asking for cash salary. Now just imagine if I will accommodate the request of everyone, what will happen? My cash outflow will increase heavily. Understanding? I'm saving my good amount of cash outflow by giving you these kind of benefit. Now, if I will accept your request, not giving you benefits and giving you cash salary, my outflow will increase very heavily. I'm your employer. I'm smarter than you. I will tell you what problem you have. Paying tax on that 2 lakh. Hello? 2 lakh is your income and is not coming in your hands, and still you have to pay tax on that income. I am deducting TDS on that. That is your problem, no? No problem. I will not deduct TDS. Okay? On that? Happy now? Keep the keys of car. Keep the keys of accommodation. Ramu Kaka, take care of sir. Go. All the benefits you keep. Keep on showing the value of those benefits as your salary. Whatever tax on that salary is there, non-monetary salary, whatever tax is there, that tax which I was supposed to deduct at TDS, don't worry, I will not deduct, I will pay that from my pocket. Because the government is going to ask, understanding, I will pay that from my pocket. Now tell me, if I will give benefits, that will be treated as your salary. And on that salary, I'm not deducting TDS. Don't worry, I will pay it from my own pocket. That will earn loyalty from you. You will respect your employer. You will say, see, my employer, good person, gives me benefits. Those benefits are treated as my salary, my income. I should pay tax on that. But he is not allowing me to pay tax on that. He is not deducting that tax. He is paying that tax from his pocket. Very good employer. Start seeing good about me everywhere. Yes or no? By doing this, for example, 2 lakh was your non-monetary benefit. Tax amount on that I was supposed to deduct. Example, it was 20,000. It was which I should have deducted. But what I said, that I will not deduct it. I will pay this entire tax from my own pocket. I deduct this 20,000 TDS. No, I paid this 20,000 from my pocket. I paid this 20,000 from my. I saved my 2 lakh rupees by just spending 20,000. Smart. And I earned your loyalty also. I earned your respect also. That is why I am your employer, no? And you are my employee. See, I have saved my cash outflow of 2 lakh by spending just 20,000. This is done by almost every employer. Almost every employer in almost all the industries. What the employer will do? Will keep on giving you benefits. You will say, sir, I don't want all these benefits. Okay, these benefits will be treated as my salary and I will have to pay tax on that. Why are you worrying? That tax I will pay. The tax I will pay. I will not deduct that tax from your salary. Take these benefits. So that way I will save my cash outflow, which I would have to incur. If I would not have given these benefits, I would have to give 2 lakh rupees salary in cash. Because whenever I'll send you the offer letter, no, in that offer letter, I will say that your salary is 10 lakhs. Out of that 8 lakh cash I will give, benefits worth 2 lakh I will give. That way you are going to get 10 lakh. So you have accepted 10 lakh rupees offer, but that 10 lakh does not mean that 10 lakh you are going to get in your hands. So to attract you, I will say, see, I'm offering you a salary of 10 lakh rupees. Oh, 10 lakh rupees. But in hands, how much you are going to get? 8 lakhs. You say, sir, what? How come in hands 8 lakh rupees? Accommodation and everything I will give? No. Those will be the benefits. And 2 lakh rupees will also be treated as your salary as per Income Tax Act. Those things, if I'm not getting, so do one thing, no, change the offer letter. Change the offer letter. Give me this 2 lakh rupees as cash salary. Why? Sir, this 2 lakh rupees is not coming in my hand, still it will be treated as my salary. So I will have to pay tax. Why are you worrying? I will pay tax on that. Your salary is 10 lakhs. Whatever non-monetary salary is there, don't worry, no, on that I will pay tax. I will not deduct TDS. How much was the tax? 20,000. If I would not have paid this, I would have to give you cash salary of 2 lakhs. I am saving just by spending 20,000 for me. Smart. Understood? Now see, the tax which I am paying on your non-monetary salary, was it a tax? It was supposed to be paid by you? Is it your liability? Met by? Isn't it a clause 4 perquisite? But it will not be treated as a clause 4 perquisite. For you, it is fully exempt under section 1010 CC. So whenever the employer will pay tax on your non-monetary salary, that is fully exempt under 1010 CC. Otherwise, well, this amount is as your, if this amount was not exempted, just imagine this amount was not exempted. 20,000 I have paid for you. Your obligation made by employer, again becoming your perquisite. Show it under the head salary. So now under the head salary you will have to show 20,000. This 20,000 you have received. This 20,000 you have received, but still it will be treated as your perquisite because your obligation made by employer. Now on this 20,000 who will pay tax? Don't worry, I will pay. Again that will be treated as your perquisite. Again that will be shown as a part of your salary. On that, who will pay tax? Don't worry, I will pay. That system will not end only. Understanding? So you have to break the chain because before the chain is made. Because this 20,000 treated as a perquisite. Sir, this amount I have not received. So on this, don't worry, I will pay tax. Every time whenever the employer will pay tax, tax on tax, tax on tax, tax on tax, this will never end. End it before it starts. fully exempt. This will not be treated as a perquisite under clause 4, not taxable for employee because it is fully exempt. Understood or not? But at the same time, employer cannot say, see, I have spent 20,000 rupees for my employee. Give me the deduction under PGBP head. Can your employer say that? Sir, it is an expenditure incurred by the employer from his pocket, sir. It is a PGB. In my business, my profession, employees are there. For my employees, whatever amount I spent is my business expense. I'm giving them salary, business expense. I'm giving them allowances, business expense. All the expenses which I incur on my employees is my business expense allowed under PGBP head, sir. So this amount is also paid for the employee only, no? It's my business expense. Should be allowed. Not be allowed. There is a specific disallowance under PGBP head. When you'll go to PGBP head, there is section 40A, 40 clause A subclause 5, which says that any tax paid by the employer on the non-monetary perquisite of his employee will not be treated as expense in the hands of the employer, allowable under the head PGBP. This will be disallowed. This will not be allowed as a deduction. Just imagine if this tax was also allowed as my expense. Can this tax be allowed? Right now, they are saying that, no, this is not your business expense. Disallow. We are not going to give you the deduction for this tax under the head PGBP. We are not going to consider this amount as your business expense, which you cannot claim under the PGBP head. Employer cannot claim this as PGBP expense. Just imagine if this was not disallowed. If this was also allowable, I could have claimed the deduction of this also. Then this would have been superb benefit for me. How come? How much is your non-monetary? 2 lakhs. How much tax? That you have to pay. Don't worry. I will pay. Just give me 18,000 rupees. How much was your tax? I would have negotiated with you. I would have said that, see, 20,000 tax is there, no? That 20,000 you will not be paying. Don't worry. Just give me 18,000 back. I will pay full 20,000 for you. Still you would have been singing good for me. Wow, my sir is very good. See, my non-monetary perquisite, which is my salary, on that I have to pay 20,000 tax. That poor fellow is full 20,000, but just takes 18,000 from us. Bloody, I have recovered 18,000 out of my 20. That 20 is allowed under the head PGBP. My business income will go down by 20,000. I will save tax on this 20,000 income, which was allowed. Yes or no? So if this 20,000 was allowed as my business expense, so my business income will come down by 20,000 and my tax rate was 30%. On 20,000 I will save how much tax? 6,000. By just spending 2,000 rupees. Still 4,000 tax also I will save, and the money which is going from my pocket will come in my pocket to the extent of 18,000. How much is your non-monetary perquisite, Bhumika? 5 lakh rupees. Wow. So on 5 lakh, how much you are supposed to pay? 50,000. Do one thing. I will pay your 50,000. You just give me 45. I'll start doing it with all employees. And I will start reducing my tax liability by taking this amount as a deduction under. Getting my point? Even if I have not spent 50, still I will take the deduction of 50. On that 50, I will save tax of 30%, 15,000 rupees. And out of that 50, 45 also I will recover. 5,000 benefit to Bhumika, and net tax which I will save additionally will be 10,000. Every employer will start doing this. Understanding? This should not happen. Hence, employer, We will not consider this as your business expense. And under the head PGBP, we are not going to allow you this type of expense. It will be fully disallowed as per 40 clause A, subclause 5. Do you remember this? Everyone understood? Now see, from clause number 5, we are going to continue the next lecture. But wait. Before going, this time I am giving you a warning that when I come back, I'll be coming back very soon. Yes, you will see this again. Okay. And next time when I'll come, I'll finish syllabus. That syllabus I'm going to, whatever part is remaining from here, that entire part I'm going to, do my next visit. But next visit before coming, few things you are supposed to do. How many chapters we have completed? 3 chapters. Till house property. Salary is going on. Till house property. And every question you have discussed in the class, all on your. I'll make sure that within these days, write the test for all the 3 chapters which I have finished. Yes or no? I'll set the papers on my own. So, I'll set the papers on my own, and I'm requesting, no, I'm giving you a warning that everyone has to attempt those tests. Okay? Third thing, chapter is pending. So next time, my first lecture, majority of the part of this chapter will be over. Because now there are no big things remaining in this chapter. Only few perquisites, small perquisites are remaining, and provident fund concept. So at the most, maximum 2 lectures will go to finish this chapter. And then immediately we'll start with PGBP. So next time when I come, I want to start from this part. I don't want to give you a revision. Without revising, if you are coming to the class, before starting the class, I will do the vivas. And if you are not able to answer no, then that time I will send you back home. Read and then come. Because I am not coming again to give you revisions. I am coming again to continue your syllabus. Revision is your duty. Understanding? Will you be able to revise the things? Notes I have already provided. Yes or no? The updated notes, 2-3 pages were remaining. Okay, 2-3 pages I have added, and I'll send them again today. So ignore my first notes which I have provided. The notes which I'll send today, final notes, full notes. Okay, because 2-3 pages were remaining to be written. Understanding? So we are meeting in the next visit. Till that time, take great care of yourself. Okay? If I'm alive, I'll meet you all. No, I'll be alive. 100 years I have to live. Okay, see you all. Bye. Hey, wait for some time. I guess Shana ma'am has to talk with you. Okay? Wait for some time. Bye, guys.